Hey guys, B Twice here. Today is Monday, July 19th. Crazy day in the markets. Obviously, I'll start off by saying I was clearly wrong about where we were going to catch support today. I'm not going to concede the top is still not in. Um, we still have a wave 5 higher to go. Ultimately, the top was in for our wave 3, which I did not think so. I thought that we were going to still have a last push for our wave 3. So that means before the end of this year or so, when we do find our wave 5 price target, will be in for probably a relatively large correction. I just don't think that time is now. I think people who are really going all bear out right now are going to get burned. Hopefully, I'm right. So, with that being said, let's talk about what I saw and what I see now. So, what I saw before is that we were in our push. We were going to catch support and we were going to have one last rally higher to take us up to this wave 3 price target where I had it in this mid 440 range. I really liked 428 as strong support. Um, Somewhere right in this range between 426 428, somewhere in that range. We blew through it in pre-market and I knew I had to reevaluate my stance on um, where exactly I saw this thing going. So I didn't take a trade first thing in the morning. I waited till after 10:30. Generally with options, you want to wait till after 10:30 or 11, unless you know for sure that you're going to get a bounce in the direction that you want it to go and that you're going to scalp, because volatility will turn against you very, very fast. And usually, if you buy it open by noon, it'll be a losing position if it doesn't drastically go your way. Um, so with that being said, I waited till 10:30, 11 o'clock so I could evaluate what I saw the market was doing so then I could take a position. So there's two things that this market could be doing right now. Both of them were saying the exact same thing, though, is that we were oversold on the RSI because we just flushed so far down. So we're gonna have a pop back up to the upside. So because I said, hey, when I noticed this morning that, hey, that you know what I mean, that it looks to me like this wave 3 peaked, that we're looking for our wave 4 bottom. By looking for our wave 4 bottom, it could already be in because technically we have came down and see how we touched this 14.6 retracement perfectly and bounced off it, or we got close to it and we bounced off of it. So it is possible that that bottom's already in. So the bulls are saying, hey, this bottom's already in and we're about to make a 5 wave impulse up. It's going to take us to all-time highs somewhere towards 450. And that's why this morning after 11 o'clock, I was buying calls on SPY. So because even in a bear scenario, with being how oversold we are, I should at least be able to scalp some options for weeklies, maybe 2 weeks out, and I should be able to scalp and get out up here with half my position and then let the rest ride, and then take profits quickly if it starts to turn against me. Because with that being said, even in a bear scenario, we should at least have came up, see how we came down for an A, came up for a B, and we came down for a C, and this is where we bounced. So with that being said, even in a bear scenario saying that this is a W and we're in a double correction, we should still see an A, B, C to the upside. That A, B, C to the upside should take us somewhere around this 50% mark, which is right around 429. If you noticed at close, there was huge buying of institutions into close. When you see huge buyings at close, it's usually institutions. There was tons of dark pool prints coming through. You better believe this thing's rallying back up to at least $429 a share. I wouldn't be surprised if we saw it tomorrow off a rally to 428, a pullback, and then ultimately 429. Now, with that being said, if you were buying the dip today like me, any of your short-term positions, because I was buying September and further out calls because I don't think that this was a wave 5 top and that we're going to just completely kill the market. I think it was a wave 3 top. So with that being said, I'm buying September, late August, September calls on SPY. And the reason I'm doing so is if I'm wrong and this wasn't the bottom, and we go lower, I can double down on my position here and ultimately still have relatively good gains off that trade. Now, I want this to be bottom, obviously, because we'll get back to all-time highs quicker and I'll make more money. But with that being said, I also bought weeklies betting on this guy going up to about 430. So now tomorrow, hopefully I'm right because right now it's trading at 425.65. Tomorrow, if we get a good pump at open, I will sell those positions because ultimately we're going to be watching this level for a rejection. If we do get rejected somewhere around this range, mind you, it could be shallow. Maybe we get rejected at 426, 427, and we just had a small 3 wave up. I'm hoping that doesn't happen. I'm thinking we'll get closer to 430. But if we do get rejected at that level, we could go all the way down to the low 400s. I would still think that we'd catch some support here in the teens, and I would be doubling down around this area. I wouldn't really be looking all the way down to the low 400s, but it is ultimately possible for us to go that low. So a good rule of thumb right now with what we're seeing in this market is, take gains quickly, especially options on big ripper days. If you're holding calls, you want to take profits, and on big down days, if you're holding puts, you want to take some profits. So like today on my hedge, I took a lot of the profits and rolled a lot of it into calls, hoping to catch this bounce back to the upside. So we'll see what happens, but ultimately I still like seeing us go to 430. And I'm hoping we'll launch to all-time highs from there. But I will buy any subsequent dips. All right, so QQQ. Okay, so clearly I was wrong on this one, just like I was wrong on SPY, so no one's going to have to sit here and kill me for it. Clearly we went lower than what I expected, but that's why you sit on your hands at open and you wait for everything to play out, and then you come up with a trading plan based upon what you're seeing happen. So same thing, RSI oversold, should get a bounce, so that's what I played based on. It looks like the aftermarket's trading a little higher as well. We got that close bounce as well. Same thing, dart pools are buying into the close on QQQ as well, meaning that we should see a pretty nice bounce tomorrow. We have an ABC move, so then the bears are saying, hey, this is a W, we're popping up for an X, we're going down for a Y. Obviously, there's always the perma bears that are saying, no, the whole market's crashing and we're coming down here. But I'm not even talking about that stance because I do not think that's what's happening here, unless we see further lockdowns, which I just don't see coming. But either way, so the bears are saying, hey, we pulled down for a W, we're going to pop up for an X and go down for a Y. Well, look at that. They're still popping to the upside. So this is an area where if you're risking appropriately and you're hedged, you can easily play some weeklies at least to grab this, and then also buy some long term because they're both going to the same spot. It's just that if we're going based on this Y correction, we might not see these highs up here until September, October. But if we're going based on this correction right here and we're going straight up, we might see this in early August. So that's why you want to buy time appropriately with options. Weeklies are gambles. Just remember that. If you're playing weekly options, you're gambling. That's all it is. You're not God, you're not psychic, nobody is, neither am I. You're gambling on that position, and you have to have a trading plan with it. If you're playing on the direction, but you don't really care whether or not you catch the bottom or not, you just want to buy in three, which one, two, three, 7, or 11 swings to the downside, and you buy monthly contracts months out so that you're guaranteed that you're not guaranteed, but you have a higher probability of winning because really the market's all about winning more than you lose. You're gonna lose. Everybody's going to, but you need to win more than you lose. Um, so I do see the bottom being somewhere in here. I'm hoping we saw it today and we only have an ABC and we don't have a double correction. So fingers crossed we still had a small correction and nothing major. But we could still see some more downside. I wouldn't be surprised if they rug pulls again next week during tech earnings because it seems like they love to do that. Enough with the rambling. Here's a red dotted line I put as at this 345 range. We do not want to cross that level. If we cross 345, that is not good. So I will be watching that level closely because that's what I'm counting as my wave one. Um, so we definitely don't want to see that. That's obviously another pretty big drop from here as well. Anyways, all right. So moving on. Let's look at some actual winners today. So I actually was net positive today, even though I am probably 75% calls, 25% hedge. And the reason behind that is I had some big winners today. So I put Etsy on my list of top plays, and I've been buying this dip to the downside. I've already seen an ABC move down, and I said that I didn't see it going lower than this 100%. And that I think that it will definitely hold this downtrend support. Today, Etsy popped 3.2%. So it showed some serious strength. I think we've bottomed. I'm hoping we've bottomed. We might still see another little bit of a pullback, and if we do, I would say buy it because unless they have terrible earnings, I do see this going up into the mid 260s. It could see all-time highs very soon. So Etsy definitely a good hold, long-term and short-term. All right, so let's talk about Boeing. Boeing was absolutely obliterated today. I had this on my favorite picks this weekend because I see it popping up from somewhere by this uptrend line, and I see it ultimately going up to the 280 mark. So I actually opened a position today. I waited till after 11 o'clock, but it was getting completely decimated, and I said, you know what? I'm close enough to this trend line to where I don't care if it goes any lower. I'll just buy some time on my options. There's earnings coming up in a few weeks. I know that there's been a lot of orders going in for the Boeings, the 737s, and the RSI is stupid low. So with that being said, that's why I bought in, saying, you know what, this is kind of a gamble, but I do think it's going to hold this uptrend support, and ultimately I do still think we're going to be launching up in this 280 range. We might even see this sometime in September if the market doesn't completely collapse on us. So I probably would see 240s, 250s sometime by mid-August. So hopefully this is a good position, but I did enter it today. AMD is another one that I made some money on today. Um, So AMD, I've been looking for this wave 4 bottom for quite some time now, and then ultimately we're going to pop up for our 5, which is our 1, and then head lower. So there's two different scenarios I'm seeing that could unfold with this one as well, although I'm favoring the bull count on it. The bull count would be that, hey, we've already bottomed, we're popping up for a 1, pull back for a 2, we're going to go 3, 4, 5, and that's going to take us up to this 100 mark. This is what I'm thinking is going to happen because I think they're going to blow away earnings, and even if they start to have a little bit of a pullback when the earnings hit, it's going to launch. So hopefully I'm right on that, but the Bears are saying no way. This thing's going to go lower. It's going to go all the way down to this 83 mark. We'll still see a three-wave move to the upside, but we'll probably get rejected at 90 again and head lower. This is going to really just matter about A, earnings, and B, the market sentiment at that time. Obviously, there's a lot of fear right now, so depending on if we have another couple big sell-offs, even though it wasn't really impacted today because it was almost a percent gain day for AMD when the market was getting obliterated. I still ultimately think that we're going to be going up to these all-time highs. So hopefully this bear case doesn't happen, but dips still remain a buy in my eyes on AMD. All right, I'm going to pull up Disney. Disney, I lost money on today. Basically what I'm seeing is I think we have a 1-2-1-2 nest. What that means is we had a 1 pulled back for a 2. Ultimately, I see a 1 pulled back for a 2 because this is a very, very deep correction. We could have already found bottom. It might have been here, or we could zigzag up and then ultimately head lower again, as long as we don't cross this red dotted line at this 170 mark. So with that being said, the reason I put Disney on here is obviously not every trade you're going to have is a winner. And when you're in these big moves like I was back here, I took all of my initial investment off the table. Why do I do that? Well, I do that because options are extremely risky, and one big move south like this, and you lose everything else you have on the table. If you're not extremely far in the money, if you're playing out the money options a month or two out, you're going to get obliterated on these big moves to the downside, just like you're going to make a killing on the big moves to the upside. So the best thing you can do is when you're in a trade and it has a huge rally, is take your initial investment off the table or move up your trailing stop. Now, in this situation, a trailing stop really wouldn't have helped you if you didn't already get stopped out because you would have opened up today completely obliterated. And that's why I say with options, it's good to take your initial investment off the table as quick as you can because then you're playing for free. And ultimately, what happens doesn't matter a whole lot except for you'll lose your profit. So with that being said, I'm still high on Disney. I think we're going to find bomb soon if we haven't already found it today. And I still think we're going to be heading up to this 200 range. Now, with my alt count, I see the next wave 3 when it does happen, which is going to be depend on market sentiment. I do see it rallying us up to 200. So there's going to be a big, big move coming in Disney again. And maybe it's going to be this earnings push that does it. I don't know. But ultimately, I do still like Disney going to the 200s very soon. All right, one more stock to look at today because I just can't look at them all. But for the most part, if you look at one tech name today, you've seen damn near all of them unless it's a COVID play, and that is Apple. I'm showing you Apple because I doubled down on Apple today, and I think Apple is a great move. It's going to be going up into the probably 155 to 165 range. Earnings might be the thing that sends it. It could happen sometime in August. With that being said, just like with the rest of tech, it came down for this wave 4, and it's right here in the middle of the 23.6 and the 38.2. I'm seeing a 3-wave move so far. We could still have a 3-wave move to the upside just to get rejected somewhere up here and then head lower. That's very possible. I don't really care just because of the fact that if it does come down here again and I get blessed with a buy at 139, I'm going to double down at that position too. I've been long Apple since, back here. Obviously, I've had shares I've held forever, but in terms of options, I've been riding this whole wave 3 up, and I have every intention of holding until we get up into this like 155 plus range. So with that being said, we might see a 3-wave to the upside. If you're holding a lot of shares and numerous contracts, it might be smart to take a little profit off the table there just so that you have some cash, because if it does pull back down, then you can buy the dip down here. But depending on market sentiment, just like everything else, there's a good chance that Apple could just rip to all-time highs and that you won't get a chance to buy the second dip. And that's why I was kind of fast on the trigger today, a lot faster than I normally am, is because this market has not been forgiving in that manner. It's been ripping back and forth so that it keeps people out. It goes from being super high to and choppy to dropping, and then within a day it goes right back to all-time highs. So if you weren't already in for the move up, then you're sitting on the sidelines, and that's why I started metering myself in today. And I'm still pretty heavy on hedge just because I do know that if we drop again, I'd like to close more of that so that I can open another bigger long position. Because obviously I'm betting right now that the ultimate top of the market is not in. So hopefully I'm right on that. I think that's all I've got for today, guys. So if you like these videos, go ahead and hit like and subscribe.